Let's get started. Welcome, everybody. My name is Ramu, and on the other Zoom screen is my dad, Dr. Velu Raman. And today we are super excited to share with you about our latest investment in RadoLabs. RadoLabs is a very fast-growing diagnostics company in Tamil Nadu, India. Now, there's a lot of personal connections in this story and in this investment, as well as a lot of personal investments as well. So let's get started. First of all, I'd like to welcome Dr. Brinda and Mr. Anthony Brighton. So they're on the screen. They are the co-founders and senior operators of RadoLabs. So a little bit of backstory before we jump into the PowerPoint. We've been associated with Dr. Brinda and Mr. Anthony Brighton for about a year now. We actually met in Europe at a conference and struck up a conversation, explored a potential partnership. And as we do at Team Velu, took our time, right? We let it simmer and see what happened. Over time, the relationship built, the partnership came, and my dad invested in a center in West Mambalam in Chennai. Soon after, they came up with another investment, a cluster concept. My dad took one, my wife's uncle took another one, and when their third cluster investment came up just a few weeks ago, I took it. Their fourth one that came up, you won't believe it, was taken by another family member of ours. The reason you've not heard about RadoLabs yet is because we keep eating all the investments that they offer us amongst the family because we're super excited about it. We believe in them, we believe in the product, and the returns are really good. So just the operations and the model have worked out really well. A little bit more backstory. Approximately 2 to 3 weeks ago, I spent a full day with Dr. Brinda and Mr. Anthony Brighton from the morning till the night. We went through every single type of outlet that they've had, that they currently operate. I talked to the staff. I explored their back ends. We looked into the books. I talked about the corporate structure, the culture. I drilled them with questions, gosh, for probably 6 to 7 hours, and they patiently answered everything. I'm very happy to tell all the investors. Now, one of their answers made me raise an eyebrow. All I was able to understand was that we are perfectly aligned in our value system. And something else that I'm very excited that came from that is actually this investment. They are looking to grow their company. Of course, everybody is, but what is so special about this? RadoLabs is poised at such a fast growth enterprise that they are actually acquiring a company larger than them that has not been able to grow in the last couple of years. And they need a significant amount of capital in order to do that. And that's when they turn to us, and that's where our newest partnership is born. So I negotiated a very aggressive deal with Mr. Anthony for our investors that I think you guys will really love. You got a summary in the emails. That's why you subscribed. That's probably why you're watching this webinar or recording if you're watching it afterwards. We are super excited to get into it, but first the background and everything else. So let me start with the PowerPoint. RadoLabs and Team Velu. So they can explain the logo a little bit, but I'll let them get to it a little later. Our agenda, we're going to meet the team. Then we're going to get into about RadoLabs and the history of the company. We're going to get into some success stories, personal and industry. Then we're going to get into the market research and finally end with the investment and projections. And we will, of course, end with our chart of your returns. So let's get started. Meet the team. So Team Velu is the capital partners for this investment, led by founder and managing partner, Dr. Raman Velu. I'm going to turn it over to my dad to introduce himself.
All right, welcome everyone. This is Raman Velu, and I have been in the investment arena for over 20 years right now. And I have been helping myself and by starting with the single family homes. Once I had about 10 homes. And then I moved into apartment investments. And now I'm helping a lot of people make money so that they can become financially independent pretty quickly and also create a lot of passive income, cash flow. So that is what we are focusing on. And we know that India is a big economy and we need to take part. And we have been diligently working for the last 2 years. And here is the first one we are presenting to our investors. And I'm so happy to do that. And Ramu is leading, and I am supporting him very strongly from behind. And thank you all very much for being here. And we will make this presentation a very valuable one for you guys. And remember, you will be able to use this money for your expenses. You have motivation to come here often, or you will be able to send it regularly to your parents because there is going to be a regular cash flow. And also it is kind of mostly guaranteed, but still it is a great return. So with that said, I'm going to hand it to Ramu.
Yes, thank you.
Go ahead, Ramu.
Okay, so let me start with this. Why India? Dad touched upon this a little bit. As we all know, what's going on in the US economy with the Federal Reserve Bank, rising interest rates, the inflation that is out of control. I won't say it's out of control, but it's the highest it's been in my lifetime. It's getting really interesting to do straightforward investments like we've been doing in the last 10 years through Team Velu. So we're approaching alternative markets that are solid. As we all know, during the 2008 global crisis, India was hardly hit. They were one of the few countries that were hit minimally and recouped very rapidly. I believe India's economy is elastic still today and has the power to self-sustain regardless of the global market. We all know about the Indian economy and how it performs on the world stage. But let's also get into this investment coming up soon. So just as a quick summary, right? My dad and I are partners in Team Velu Investments. We've raised over $30 million, successfully deployed for our investors. We've never had a bad investment. We've always protected the principal of all of our investors, and we have helped see returns that are well beyond normal. We project 20% per year, and we've returned up to 45% per year in some instances. What we do is we prioritize the investor to bring risk-mitigated, high-return investments. We do the homework because you don't have enough time to do so. Anyways, without further ado, I would love to introduce Dr. Brinda and Mr. Anthony Brighton to introduce themselves and continue with the presentation.
Yeah, so Vanakkam, and very happy, very happy to get connected. And thank you, Ramu and Dr. Raman Velu for scheduling this webinar. It's been a pleasure for us to connect with Team Velu. And just a short introduction about us. Like, I'm Dr. Brinda Brighton, and I'm the co-founder and CMD of RadoLabs. I've done my PhD in psychology, and I've started my career in Apollo Hospitals as a psychologist. And I have around 25 plus years of experience in healthcare and management. And I take care of the entire operations of RadoLabs. And while my husband, Brighton, yes.
Hi, hello. I am Anthony Brighton, and I'm a business graduate, and I'm into entrepreneurship right from the past 27 years. And a good part of it, I was into other industries, into interiors and, furniture industry. And for the last 9 years, I'm into this diagnostics. We started as a very small company in 2014, and today, after 2020, we have started growing very rapidly by starting this company, RadoLabs. So, Brinda, you can go ahead.
So, like, basically, to know, like, we can just go to our advisors of RadoLabs. So advisors of RadoLabs, we have Dr. Shekhar Swaminathan. He takes care, or he advises us in terms of mergers and acquisitions. And we have Mr. Krishnamurthy Vijayan, who is our investment advisor. So he takes care of structuring all our investments. And we also have Mr. Prajoy. He's our legal advisor. He's a practicing advocate in Chennai High Court, Tamil Nadu, India. So, and we have other advisors also. Probably, because of certain reasons, they are not, officially, we couldn't reveal them. But of course, we have a very strong team with us. And while going back about RadoLabs, why RadoLabs? I would like to just tell you very briefly the name RadoLabs. RadoLabs means it's RAD stands for radiology, which will be your MRI, CTs, echo, and ultrasound. So all that we call it as radiology. Whereas lab, as we all know, it's laboratory. So we wanted to connect both together. So that is how we found RadoLabs. That's how the word, was born. And we are integrated diagnostic facility in Chennai, okay, based out of Chennai. And basically, why did we start? Why did we come to healthcare diagnostics? Like, I would like to go back to my own personal experience. Like, 2003, I was married, and 2004, my lovely son, Anthony Kristen, we call him Chris at home. So he was born, and it was a wonderful journey of pregnancy. And the day he was born, like we knew that he has a congenital disorder called scoliosis, and which means he has a bent spine and hemivertebrae too. So like the whole family was shattered. Like I was taken back because we did all our scans completely, but somehow we were not able to find out. But then I only thank God, and I'm very proud, and I'm very happy. We are very happy to have him as our son, because but for him, this RadoLabs wouldn't be here today, and we will not be meeting you today here. So and then that's when, being in Chennai, which this anomaly was supposed to be diagnosed during our anomaly scan, which we do it in the 20th week during our pregnancy. So this anomaly wasn't, visible. Like they were not able to diagnose it. So that's when I realized, being in Chennai, of course, with scoliosis, it's always manageable. But there are other anomalies which you will not be able to manage. So in that case, we have to go for termination of pregnancy. So I was like, wanting to do, let me, being in Chennai, if I'm not able to get a quality, diagnosis, how about tier 2, tier 3 cities? And so that's when I wanted to, do something in healthcare diagnostics. So we thought back, we were thinking so much. And with our son growing up, I also wanted to take some time. And then in 2014, that's when we decided, okay, let's start. And 2014, we started diagnostics. And it was only till ultrasound. We had this facility in Porur. At 2018, we started in Perungudi. 2020, we came back to RadoLabs. We started it as we floated it as a private limited company. Ramu, can you just switch over to the next slide, please? Yeah. And that's how RadoLabs was born. And we first thing, if you walk into any of our centers like Porur or Madipakam, you can see Thiruvallur statue, Thiruvallur, in front of that's Thiruvallur only welcomes you. And we believe that Noi Nadi, Noi Mudal Nadi, Adathanikku Vai Nadi Vaipachayal, which means for any treatment, diagnosis is the most important part. And you need to know the cause of, any disease or condition. So that's what when I speak to my team, I tell them, see, when you hold a tube, a sample, a blood sample in your hands, you are not holding just a tube, you are holding a life of a person, because the results that we are going to give them is going to, take them to the next stage of treatment. So that is what I tell my team. So we understand the importance of, diagnosis, proper diagnosis, accurate reports, timely reports. And that is why we believe in Noi Nadi, Noi Mudal Nadi, Adathanikku Vai Nadi Vaipachaya. So our mission is to, ensure every human being all over the globe has access to precise, reliable, and high quality medical facilities. we have aligned our mission with respect to the UN Sustainable Development Goal 3, where it's health for all. That's the mission. So we have aligned our mission, with the Sustainable Development Goal of UN. Our vision is to provide affordable and quality healthcare for people, irrespective of demographical limitations. See, people in Chennai, you get very good reports. You get, reports, faster reports, quality service. But when you take people who are, even in Trichy, for that matter, my mom, when she was diagnosed with COVID, I had to wait for more than 24 hours to get her RT-PCR report. Whereas in Chennai, I was delivering reports in 3 hours. So we wanted to break that barrier of demographical limitations, and everyone, even in Andipatti, if a person has to do a test, he should be able to get the same quality what a person in Chennai gets. So that's our vision. And and going back, then Ramu, can you switch over the slide? Yeah, so we are an ABL certified and ICMR approved lab. And in March 2020, we had the first center coming up in Porur. And right now we have one hub center, which we call it as Mother Lab. So that's the Central Reference Lab in Nandambakam, Chennai. And we have 6 radiology centers, which is like we have one in Porur, Madipakam, Punamalli, West Mamlam, and OMR. The last one, that is the 6th one, is coming up in West Tambaram, that's in Mudishu Road. So these are the main integrated centers, which means these centers cater to radiology and pathology. Apart from these centers, we have around 7 collection centers, independent collection centers, and we have 2 clusters. So 2 clusters, I think Ramu was mentioning. One was already taken by Dr. Raman Velu sir. So a cluster is a set of 5 collection centers. So we have 10 collection centers in these 2 clusters. So this is what our journey is from 2014 to till date.
Well, so yeah, this slides talk about the positioning of our centers. So this on the left, you can see the Chennai map where whatever we have marked, and the right we have the Trichy. In Trichy, we have one recently started. In January, we started this new hub lab. In fact, we acquired a lab there.
Yeah.
And then we also have 2 collection centers near Trichy, in Thurayur and Manapare. So this is our total strength. And from here, we want to grow much bigger. So maybe we can go to the next slide. Yeah. So the tool we chose to grow is actually the franchise model. So we have a very revolutionary, I would call it, franchise models where the entry cost of a franchisee is much, much lower. Normally, any franchisee, the franchisee have to do all the investment. In addition to that, he will also have to pay a franchisee fee to the franchisor to use his names and the technology. So here, what we did was we started doing the investment ourselves. So as a franchisor, we set up the center. We install the equipment, whatever is needed. We train those team, and they just pay the franchisee fee and they get to use all this facility. In this way, we have 2 wins. One is that the franchisee can come in at a lower cost, so his investment will be lower and his IRR will be higher. And second is that we start a new center with 0 cost. So we have a internal plan in such a way that without any cash outflow from our side, we set up a new center. And because of that, we also have a higher revenue share. So our profitability is also higher compared to other franchisee models. So this is one unique thing which we have. And the second is this RCC, which is a small collection center labs where the entry cost is 5 lakhs, but we also have we are tying up with the government through the Mudra scheme, in which the young entrepreneurs who are passionate and with fire and belly, we select those people, we help them to get this loan, and they can start. And so this way we can scale faster. At the same time, we are also helping many people, young entrepreneurs, because in India, we are encouraging this entrepreneurship spirits, right? So instead of them going for a job or in a very small salary, people who can really do well will be able to achieve a lot of growth in their life. So this is the main tool, and we are also going into mergers and acquisitions. So this whole fundraising is all about that. So we are acquiring, as Mr. Ramu said, a diagnostic center, which is much bigger. I mean, as today's rate, of course, but they know we are going to be much bigger than them. So they are willing to join us. So yeah.
Like I would like to say, see, when Brighton spoke about Trichy, we have that is a different acquisition which we have done now. So that's basically for lab, because this Rock City Diagnostics, which we have acquired already, they are very strong in pathology. So we wanted to have our hub lab there. So the entire processing, they have an entire processing facility. So we have acquired them so that, you know, for us, it is the next step. Then we need to go for a radiology acquisition. So this one, what we are talking about is a radiology center. The promoter, the founder is a radiologist, and he has a standalone, a very, you know, one of the leading centers in Trichy. So that's that's the plan. And we are very clear in our path. We are very clear in our plans, because you know, we could have just straight away gone for the acquisition, but then we didn't want to do it, because we want to set up our own hub lab so that we have a strong foothold. We meet the doctors, and then it's better for us. Then you know, we can negotiate better in this deal of acquisition.
Dr. Brinda, if I could ask you a question, can you explain
Yes.
what each of the orange boxes are and what they mean, what kind of tests they are, and what kind of when you would need to use them? Just really quickly, if you could. Thank you.
Definitely, Ramu. So all lab tests, it's self-explanatory. All your sugars, your thyroid, your lipid profiles, your cholesterol tests, all that comes under lab, where the sample is taken. It can be blood, it can be urine, it can be stool. So all that comes under the lab test. Then comes the ultrasound, which is your scans, your abdominal scans, your pregnancy scans. So all that is called, you know, it comes under ultrasound. And then Dopplers are your, you know, the extremities, your veins, your arteries, blood flow. So all that studies comes under Doppler. This Doppler is also done in the ultrasound machine itself. So ultrasound machine takes care of Dopplers and also the echo, which is on the right top corner. Echo is nothing but your heart functions. So audiometry is ear. So the whether this is mainly for, you know, employee checkup, the pre-employment checkups. What we do, the employees, before they get into the company, they come to us. So we do a pre-employment check, and audiometry is one important parameter which we need to do. X-ray, of course, it's we all know it's the basic for any radiology. So first thing, the doctor asks us to take an X-ray. Then if the X-ray is normal, then the rest goes on. So that's how it is. And ECG, of course, it's for the heart functions. TMT, treadmill test, we call it, which is again inducing stress and checking whether your heart, you know, whether your heart functions are normal under stress. So that's the difference between echo and TMT. Echo is a stable one, but whereas TMT is a stress-induced one. PFT, we call it as pulmonary function test, which checks your lung functions. So that's PFT. FNAC biopsies we have, because we have ultrasound guided biopsies. So doctors, clinicians, they refer the patients to us, and we use ultrasound and CT and take samples from these sites, from the body. It can be body fluids or flesh, or it can even be skin. There are lots of different types of biopsies and FNACs mainly. So this is for, it's an advanced level of testing. So that's what FNAC and biopsy. We have CT, MRI. CT mainly helps us to diagnose conditions or diseases with respect to bones, whereas MRI, it's mainly with nerves and other systems. So that's the difference between CT and MRI. And I think I've explained everything else.
Well, just 1 second.
Yeah.
So they also have Okay, they also have the home collection, that's number one, and also the CT scan machines and MRI machines are like 1 crore. It's pretty expensive, right? So those are all, and also right now with the latest, a lot of people are going for preventions and continuous tests and things like that, so that they can proactively take care of themselves. So very frequently they are going and taking tests. And the number of tests are increasing, like bone density and so many, like genome sequencing and so on. So we are really excited about all those growth opportunities as well. And during COVID, we just gave the blood from home and they sent somebody to our home to collect the samples. So that's about it. And keep going, Dr. Boone.
Yeah. Radotech, Brighton, would you like to explain? Because technology, it's Brighton.
Yeah, thanks for Brenda. So it is about, yeah, the RadoTech system. We call it that way. It's basically the technology which is actually being implemented in the healthcare system. We all know we are talking about AI and advanced technologies coming into healthcare system even now, So Dr. Velu said about that. So here we have 2-3 things. One is the convenience based, like as a patient who comes in, okay, how accessible their reports are, how easy for them to fix an appointment, how transparent are we? So, and how they can track the status of their test, whether the sample, at what state the sample is. This is the first set of thing which we currently on running. So now anytime the patient can automatically fix an appointments and follow up with the appointments and give a test, book a home collection and everything. And the second thing which is more exciting is that how we treat patients. See, when we scale, we go multiple centers and I can't be sitting in every center. So we want some of the customer service sites to also be automated. Like, for example, first of all, I can talk about a kiosk to be kept in a center where the customer can walk in and there's like a self-service portal. They can take the tests, reports, printouts and everything. That's one thing. Secondly, we measure the satisfaction of the customer. Like we have 2 things of measure. One is the TAT, which we call turnaround time, from the time the customer walks into the center and the time he leaves. That's the first TAT. So this, we are using an RF tags, ID tags to track the the time he came in and time he got billed and the time he got the service done and the time he's leaving. So this will help us to understand the normal nature and tweak here and there. So the best part is like when this is happening, if there is a delay in any service, the message or some prompt goes to the person who's supposed to do the test. For example, if somebody walks into the center and waiting without being billed, and if they give a TAT of 4 minutes for the person to be billed after he walks into the center, and by 3 minutes, the receptionist or the billing desk will get an alert saying that, hey, this patient is waiting for almost 3 minutes. It's going to be over TAT in a minute, so you better hurry up. So instead of doing a check later and here it's what went wrong, we trying to proactively do it beforehand so that nothing goes wrong. Secondly, we are also working on a camera-based analysis of patients' emotions and expressions. This is still what we are working on. And when the patient walks in, we see how happy he is or sad he is, and we alert the front office accordingly. Oh, this guy is coming in pain. This guy is coming happily. So you can welcome. So how much of the smile they should smile at the patient? If somebody's coming in pain, we don't laugh at them. So this is the basics we are trying to teach our team. We are going to very, very micro level in customer service because we know that's the only differentiator. Anybody can do a test. Anybody can put up branches. But what is going to be a differentiator is that how well we service our customer, how happy they are going to go back after taking our services. So this is all about this Techo ecosystem. Plus, we have the regular ones like teleradiology, telemedicine, and automatic reports are already there, and electronic health records are already there. Doctor's app is there, customer app is under development, and real-time appointment tracking is still there. And as I said, transparent appointment model is there. This teleradiology is where we do one centralized place. We collect the data from different centers, and one radiologist or a team of radiologists will report it simultaneously. But here there is a catch. Normally, what happens is teleradiology, somebody takes a test today, and they go, and the doctor will see it maybe in the evening or next day, and then they do a reporting. But what happens is, in case if the test taken, there's a slight error in capturing the images, or maybe the doctor wants a different type of image. Unfortunately, the patient is no more to be taken. So here we bring in something called real-time teleradiology. So real-time teleradiology, the doctor will be watching the images on the real-time basis when the test is being taken in a remote location. And if at all he needs any clarification or any new angles, new images, he will talk to the technician, get it clarified, and after the doctor say, yeah, all good, then the patient leaves. So this will make sure that the same effect and the same kind of service we can offer to the patient when the doctor is present in the same location in a tele system. So that is what we think we are bringing in as a differentiator.
Wow, I don't think we can do that in the US. They might send us back. So that's amazing that technology has moved so quickly, right? We can't underestimate
it's a little bit, it's like right now, I know we have, even we are doing some teleradiology stuff for the patients in the US when they just send the image here and gets reported from India. But we had this problem. So that is why we thought, well, this is a slightly more expensive thing because the doctors has to be there all the time. But yes, but then the service is the most important thing, right? The quality. Yeah. When we say we stand for precision reports and we are passionate about precision reports, we need to make sure that nothing is going.
Yeah. Sometimes, when you do an CT or MRI, you may have to cross-check with your ultrasound. So when the doctor here, he wants some kind of, a check, he can ask the sonologist or the radiologist who's present in that center to do a ultrasound screening, and then probably give their opinion so that he can correlate that and give a comprehensive report. See, that reporting is something which we really, concentrate more. I think if we keep talking, we will keep talking about,
Let's move fast. Yeah. So the success stories. So there are two ways we would like to see. The one's the industry success, where we have the recent two big, exits or mergers or takeovers. So the ThyroCare is the one which last year, 2021, early 2021, got acquired by the tech giant. And they were valued at 7,500 crores when their revenue was 468, and the EBITDA, which includes their depreciation and everything, is 181. And High-Tech Lab was 675 crores deal, where the revenue is 122, but actually their revenue was only 1 crore approximately, because that year, because of COVID, they had the COVID spike. Otherwise, it would be much the biggest. The previous year they are only doing 80. Their growth rate was only around 20% or so. So this is just to say that how the valuation of industry goes. And
if I can jump in here. So we have two examples of recent exits by competitive companies, right? In ThyroCare, we see a 15x valuation off of revenue, or over a 40x on profit. If we want to take a more conservative approach, right, we have a 5x on revenue and a 10x on profit. Something to note for our investors: only tech companies in the US get a 10x valuation, but in India, a diagnostic company can get at least a 10x valuation, if not higher. Now, here's the other really cool part about this. The founder of ThyroCare is Mr. Velumani Arogyaswamy. I actually had the privilege of meeting him. He was the keynote speaker at a conference I went to, and I got to hang out with him and spend time. I actually have his cell number. He is a billionaire. He's a billionaire who started with nothing, created a huge company, and sold it. In fact, Dr. Brinda and Mr. Anthony Brighton know him personally as well. This is great for us as investors. Access to people who've already done it in the exact same space. That is amazing. He's not even a competitor. He's retired now. He's ready to give open advice for anybody who wants to start a business. That's his social give back. He loves to go help entrepreneurs build their company. And he's available for support. So the fact that, we're that well connected is something to share. If If you guys recollect, earlier they said they have a lot of advisors, but they cannot legally list all of them. This is one such advisor that we cannot legally list. I have a few others, people who own hospital chains, they're on the board of advisors as well. Legally, they cannot be, but that's a different story. They're friends, so they advise on a personal level. So kind of back to you guys, on that front. Let's get to the next RadoLabs success story with past investments.
Yeah.
Yeah.
This is the thing it happened in 2014 when we started our first diagnostic center. At that time, I was a little short on cash, so we had an investment of around 1.15. Actually, out of that, around 105 was the initial investment what we did. So here, the 60 was equity and 45 was debt, and then we, those days we were also new, so the investor who came in were totally new to us. They were not our friends; they were friends of friends. So they trusted us and they came in. So we were very thankful even today to them, and we are still friends and they are still investors in RadoLabs. So that's the first success. Second is we honored our commitment of the debt. So out of this 105, 645 came in as debt, and which was paid back in 4 years at a 20% rate of interest. So the first year is a holiday because it's a new company. We weren't able to generate revenue then. We knew that. So from the second year onward, we started paying interest of almost a lakh every month, a little more than a lakh every month. And then at the end of fourth year, we paid the principal completely. That day, we made informed decision. Like from the second year onward, we started having a recurring deposits running in the lab in our banks parallelly. We started at 25K, then 50 and 1.5, so that we acquired the money required to pay back in the fifth year, or the end of fourth year actually. So that is one. And second is the 60 lakhs, which was actually invested into the equity. Today it has grown to a staggering, 39.68x. I would say that is for the most silent investor. We had a few friends, now friends, who invested then. And one of them is silent, meaning he never invested anything more than that after the 2014. And he doesn't even, come to our meetings. But just as a friendly note, we are in connect. He's got this much. The others who are actively, who has invested more, they have even earned much more than that. So that is how our success story was, which we are very proud to say that all these people who we met in 2014 as strangers are now one of our close friends, like family friends. We meet whenever we could and talk almost like every other day over the phone.
Yeah. And Sanjay, he's in US. He stays in California, and Wilson, who is also, both of them are in RadoLabs. He stays in Bay Area. Right?
Bay Area. They're both in
Bay
California.
Area. They're both in California.
So something awesome to note is that in 10 years, someone's investment has gone up by 40x. So we're not promising 40x returns, but we do want to show you the rate of growth. So when we get to our future projections, you can understand the momentum that has been behind the company. So let's get to the next slide.
Yeah, here, this is a survey by Edelweiss, and they have valued the, they did a complete survey. This is a 2020 data, and they went to all the chains and everything. So here, the two things. One is the diagnostic chains, who is assuring the quality and, the report quality and adherence to all the norms. But what happens is, for them, servicing a doctor on the grassroots level becomes difficult because it's a big chain and we have employees everywhere. So what happens is when they have to go and service a doctor, he cannot do this on his own. He needs to get an approval if there's any deviation. So here in this, the industry says clearly 55% of the business is from doctor's referral. So this is where the big chains lose out and the standalone diagnosis centers come into play. Yeah, they can service the doctor. They are flexible. They do whatever the doctor asks to do and whatever the patient asks to do. So, but their quality standards are not big. They are just one center. They cannot do a big investment in equipment or even the testing. We have this calibration and controls running. We I mean, we can go a long thing. I will just pass that. So this things they cannot do. So the idea is like we bring the same quality of the chain, national chains quality through a franchisee. We also give the service of a standalone center. So this is our model. So this 55% of the referral, when we are giving a quality which is much superior than what they are getting, it's easy to convert, and that is what is happening right now in this industry. So this way we can easily get a bigger share in the market and grow faster than our competition. So
Can I clarify a little bit?
please.
So just to interpret and represent what Mr. Anthony just spoke. So if you guys look at the chart, right on the top left corner, you can see the rapid growth in USD of the Indian healthcare market. So it's a growing industry, so a great place to be, of which in the diagnostic industry, we can see that the diagnostic chain, which is what RadoLabs comes under, currently we're a regional chain. The benefit that this model has is that you can provide the quality of a hospital because of the calibration of your tests. Every day, I believe you have to, quote unquote, waste 2 to 5 tests to calibrate your equipment. And about every month or so, you've got to waste an additional 10 tests to recalibrate in a little bit of a higher standard. Now, these standalone centers that are very small do not calibrate daily because they might only get 3 tests a day. They're not going to waste 5 tests to do 3 tests. So they're off. This does not meet the high standard of quality, which is why Dr. Brinda even started RadoLabs. So we have the ability to have the highly calibrated, accurate diagnostics for the customers and patients, while also having the personal connection of a standalone center. Now, what they were talking about is that in the middle chart, as you can see in Exhibit 3, 55% of the business comes from doctors' referrals. Doctor says, go here and get a scan. Patients don't question that. They go there and they get a scan, which means you have to go build a relationship with the doctor. That is not doable by middle management in a large corporate structure. Doctor will ask for, special provisions and certain, things. I want the report this way. They have to go and get permission from a corporate executive. But if you are a franchise owner, you do not need to. You are the boss. And it gives a lot of reassurance for the doctor that you're going to get it done. Because if I'm running a franchise, then I will be able to go and promise the doctor something that they request and be able to deliver it. And the doctor has confidence that I will do it, right? Because he knows who to get in touch with if that doesn't happen. That's what we're talking about. We can provide the high level of quality and personalized service through our hub and spoke model.
So the most important thing is the growth, guys. Within 2020 to 22, 25% growth. And it is all going in trillions and billions. And so we are going to take a decent market share. And there are small labs out there, but the chain of labs is going to be a great thing, which really going to help provide the quality service at an affordable rate. So that's what we're banking on and expanding everywhere. And we have a lot of scope. That's it. Thank you.
Yeah.
All right.
Yeah. One more thing, Ramu. Actually, in fact, the government now they are also kind of changing the policy to bring about a quality healthcare practices. So mostly I think shortly NABL would be mandatory. So today NABL labs are very, very less compared to normal labs that we found in every street. We see so many labs. So there's a lot of consolidations going to happen. So that's why we are very serious about acquisition, mergers, and consolidations.
By the way, NABL, is that correct?
Yes, it's
NABL,
the national.
Go ahead.
Yeah, please.
They certify labs for high standards. Also, I'm very happy to say that as of last week, RadoLabs has been certified, passed with flying colors. So we are already ahead of the curve on that front.
Yes,
Okay.
absolutely.
So let's continue with the market research. Back to you, Mr. Brighton.
Yeah, hi. So this is again about the general growth potential. So basically, today the number of tests per thousand in India is only 1,111, whereas a country like Brazil, they are doing 5,900 tests per thousand people. Australia is 10,000, and US is more than almost 21,000 tests per thousand people. So, I mean, for a country with such a big population, the growth potential is so much because, see, at least if not if not the US, Brazil is something which we should reach very soon, which is almost sixfold growth right away. And the population what India has is huge, huge, huge. So here, this test, whatever we say, this 1,000 is even mostly happening only in the main cities, when the tier 2 and smaller towns are totally ignored. So now that's where our focus is going to be. We are going to spend more of our resource into the tier 2 and smaller towns, where the growth potential is much, much higher. In the last couple of weeks, when we were in Trichy, we met doctors over there in the smaller towns. We understood so much potential is there. They are like craving for quality, actually. If we can just promise the quality and service, the market is ours. So we are really very bullish about it, actually. Then about the franchise model, which I already said, that is going to propel our growth very fast because people are walking in. I mean, we are actually exceeding our targets. Like the Trichy, as per our original plan, Trichy was supposed to be for the next financial year, but we were able to do it quicker because we had a franchisee who wanted to start the center there in Trichy and in Tanjavur. So we wanted to accelerate that part. So the growth is actually happening faster than what we were actually planning to do. So, this is about the growth potential in this industry, Ramu. And so the investment and projections. Yeah. So this is the financial projection. As I already said, we started this company in 2020. We did a 2 crore revenue in the first year, and the second year we did a 9 crore revenue. The first year is actually not a full year; it is a half year, a little more than a half year. So that is also one reason the growth is so high. And this year we are, plan to reach 12.5. We are heading towards that direction right now. And the more importantly, I would say the number of centers growth. Like we started with only 1 center, then the second year we had 3 and 5 collection centers. Today, this year we are having 6 and 30 collection centers. And the next year we are going to have 17 and 150 collection centers. So this is the growth plan. So in simple terms, the revenue is just a multiple of the number of centers. So when I start a center, I know the first year it's not going to do great because that's the incubation period of that center. And the second year is where the revenues are really going to come out. So we always plan the revenue of a center which is open this year for the next year. So that is how the revenue projections are made very scientifically. And EBITDA, in fact, generally the market EBITDA, if you see in the previous 2 cases, Thyrocare had around 25-30% EBITDA, whereas this high-tech had almost close to 50% EBITDA, I mean, close to 45% EBITDA. It's because they are only in pathology. But here we also have radiology. So in the franchise segment, radiology cost, is basically in the franchisee side, and our revenue share is only on the capex. So basically, our capital is what we have invested. When the growth is higher, our ratio of EBITDA goes much higher. But here we have projected a very conservative 30% EBITDA here. But still, that itself is a lot of growth, as you can see. So in 23-24, we are expecting close to 8 crore EBITDA. And because that jump you can see from this year to next year, because of this investment coming in, the acquisition going to happen. Immediately our revenue goes up. That the company which we are acquiring, they have around 22 crores revenue, plus they have around 5 crores EBITDA. So you can see the growth immediately in the next year. And after that, it is the gradual growth. We have a few more acquisitions also planned line in the coming years, smaller companies actually. So this all forms the part of our growth. So in the 6th year from where we are planning the exit, we are scheduled to touch cross 300 crore revenue number, and our EBITDA will be close to 100 crore at that part of time. So, the valuation we saw which can be much, much higher. But we have taken a conservative of 1,500 crore valuation, which will be at the time of our exit. So that's a projection.
So something that Mr. Anthony said earlier, I want to touch on. He said all these numbers are just mapped out or returns by the number of centers they open. Now, that confidence that he has comes from how well they have made this into a science. If they open a center, they know exactly in what year, with a margin of about 15 to 20% plus or minus, how much that center will make per year. How do they know this? They've been in the industry for a long time, and they really do their homework and their pro forma. They also, as you guys know, it's a retail location, so real estate is very important, do a very good job of picking the real estate locations for their labs and collection centers. That was one of the many things that we discussed when we were there. If you are interested to know more about how they pick those locations, we'd be happy to answer that at a later time. Now, something I wanted to get into is always my favorite slide in any investment presentation, which is our return on investments. So just so you guys know, this is a guaranteed return. It is a secure investment. What we are doing, what RadoLabs is doing, is they are issuing bonds. Now, bonds are very safe and secure, right? But they also don't have this upside potential, which was the one part that was irking me. I wanted the security, but also wanted the upside potential. So what they did was what we structured was that you will get the bonds and you will also get shares for 20% value of your investment. So as the company grows, you can either hold on to your share or sell them back to the company at the end of 6 years. So minimum ROI. So let's kind of walk through the table here, right? So we're assuming a minimum investment of $50,000 or 40 lakhs INR. This math is for our convenience and simplicity. $1 US equals 80 INR. Currently, I think today it's 82, but let's take these round numbers for example. Year one, there are no returns. Year two, every month, you're going to get 33,333 rupees, right? Or an annual rate of $5,000. Year three, another 10%. Year 4, 5, and 6, you're going to get 15% return in INR or USD. And at the end of 6 years, they're going to buy back all of the bonds for 125%. So we're going to get our principal plus 25% back at the end there. If you add all of this up, this is your principal plus 90%. There's also the 20% equity. Now, here's the catch. They will buy it back at today's value. They're not going to buy it back on tomorrow's value. So you can, if you want to sell it directly to them on exit and just be done, you can treat it as 110% and move on. If you want to play the longer game, you can hold on to those 20% of shares, but you won't be able to sell it back to them unless they request it at some future point. You will be able to sell it to different investors or sell it on the exchange in the future. Now, what does this mean? You are going to get a minimum of a 2.1x equity multiple guaranteed. 90%, whether you like it or not, you're getting back, right? 20%, if you opt to, you'll get that back as well. If you want to hang on to it, we can see up to a potential of a 4x equity multiple or a 300% return based off of the projections that Mr. Anthony has placed. Now, as you guys know me, I always like to play very conservative. So I'm not coming for the 4x projection that Mr. Anthony put on this. I'll come for a 3 times valuation of today. That will give the 20% a 60% value in the future. This means your investment has a potential in 6 years of being 150% or 25% annualized rate of return. You have a minimum guarantee of 15%, but a potential of 25% or more. Now, I have never used the word guarantee before because you cannot guarantee things. But in this investment, because it is a bond, we can guarantee it. It is also not only guaranteed, but secured. Now, how do we get the security? Dr. Brinda and Mr. Anthony Brighton have very courteously offered to secure your investment value with their personal shares in the company. What does that mean? If they are unable to pay this bond, or the value of the company goes down for whatever reason, we have the legal right to go and liquidate their shares to pay back our bond value. So if we say we're going to get back 90%, we will get back 90%. They'll either pay it for us, or we will be able to take their appropriate amount of shares, liquidate them, and collect those. Now, I don't have any doubt in my mind it will ever come to that, but that security is very important when it comes to peace of mind, right? So that's what it's for. And I also want to say this. Imagine how confident they have to be in the investment for them to pledge their personal shares, right? They're not joking around. They are very serious, and you know their skin is more than in the game when it comes to this investment with us. And I believe they're going to be great partners.
So just one more thing, between 2.1x and 4x, probably Brighton will answer your question about that. And actually they will be, I think most probably they'll be buying it at the time, whatever is the value at the time of 6 years, right? And that is, he's going to tell us about that. But if you still keep holding on to it, you can make still more than the 4x. That's what is my understanding, but he will, Brighton, can you clarify on that, Mr. Anthony?
Yeah, actually, it is about that this is the minimum guaranteed, which we will buy back if the share is not even in that value. If the value is higher, yeah, there are two options. See, we will be listed by the time when we reach 6 years time. So it will be easy for anybody to offload their share in the share market. So that is the ideal situation. In case if it is not so, then the negotiation happens. So if it is a private equity, then the share is always negotiated. So we are assuring you the minimum guaranteed number as the entry rate. Over and above that, you can sell it to us or sell it to any willing buyer, because the market rate, if it is like 10x, then you can even sell it for 8x to a private person easily. If not, in the share market is, if we are not listed by then, if we are not listed by then, it's still a possibility. But this guarantee, maybe we will buy at 7x. That's something which we have negotiated what the actual market rate is. But this is the minimum guarantee. What do you enter? At that rate, we will definitely buy. So not less than that, even if the share value is not to that level, we will still buy at that level. Over and above that, how much ever the market rate goes, that's going to be a negotiation, what we are willing to pay, what you're willing to give. That's up at that point of time. Yeah.
Makes sense. Either they can accept whatever you're offering much more than what is minimum guaranteed, or you can wait for the market and all that. That's beautiful.
So I love it. We have a lot of guarantees. We have a lot of upside. There are not a lot of investments out there that give you both. You either get a lot of upside or you get a lot of guarantees. You don't get the returns and the guarantees and the upside. Truth is I went in and I asked for everything I wanted. And Mr. Brighton said, give me 2 days. I'll talk to my team and come back. And he came back with this. And I said, okay, you can't go back. And here we are. So we're very excited about the structure of this. So there's one more slide that I want to go over, and then we're going to open it up for questions and comments from our team. We were raising a total of 16 crores or 2 million USD. How is this going to be used? They are going to acquire a diagnostic center in Tiruchi for 10 crores, but the revenue will be 20 crores by the end of the 6 years. They're going to start 2 hub centers in Kobe and Tirunelveli. That's going to cost 4 crores and 2 crores of working capital. That's how we have the 16 crores INR raise amount. For us to achieve this goal and the rate that we have, Mr. Brighton and I have negotiated for the minimum investment is $50,000 or 40 lakhs. Now, by the way, you will be investing and receiving your returns in INR, not USD. That is very important to note. So we had the option of either investing in USD or INR, but we chose the option of INR because it keeps the investment very stable, and we're very confident that we can pay the returns. USD, we have to deal with, exchange rates and governments, and
You can repatriate whenever you need from your account.
absolutely, you can repatriate from any time. So you do need a local or NRI bank account to invest. If not, you can easily start one through multitude of, pan-India banks. And we can even support you with that, right? To open a bank account. We have several contacts. So your 40 lakh investment is the minimum. If you need an exception, I know that they're not really okay with it, but if you want to talk to us, if you're a past client, I'm willing to work with you and see if we can give you a variance. But we would really like to stick with the 40 lakh minimum. If you're interested, the best way to start is logging into our investor portal and reserving your slot.
Yeah, right now we have not yet updated all the slides about RadoLabs, but we do have a page there. And we will be updating it, but no matter what, you can just go ahead and then put it as a reserve. And you will have about a month or a little bit more for you to fund. And until then, you will be able to review the documents which we are going to post. What kind of documentation you'll be signing, what kind of documentation for the certificates you're going to get and all that. And you can discuss with your legal advisors and then come back to us in case if you have any suggestions. And then we will move forward with that. And this is not US based investment for SEBI or not SEBI like SEC.
This is not,
US.
yes, correct.
So, but still, it is going to be protected, and so you can check with your CPAs and lawyers here in Tamil Nadu. And that is about it, Dinesh. And
If you guys have any more questions or interested in investing, please reach out to one of us. I'm going to be the primary contact on this deal. So all of our investors in the last year are very familiar with me. Please reach out. My email and cell number is right there. We'll set up a call. We can talk about this more. If I cannot answer your question, we will call either Mr. Anthony or Dr. Brinda and get your question answered. They're a wealth of knowledge, and we really look forward to working with you. We're super excited to be able to offer an investment this competitive in a growing market, in a growing industry, in what we believe to be a very stable economy in India.
Yeah.
So with that, we are now open for questions.
Yeah, while you guys are typing up your questions, and I would like to say that this is the first one we are opening it up. We are very strongly believing that our investments should be in multiple countries, at least more than one country. And we are making that possible. And that is why this is the fifth trip I am, fifth or sixth times I visited India in about less than 2 years' time. So I'm building a lot of relationship, and a lot of things are happening. And that is not only for me, whatever I'm able to get, I'm extending it to my investors. And we will be happy to conduct another meeting of say 20 minutes, 30 minutes, if 2 or 3 investors want to join and ask a lot of questions, clarifications further again with Dr. Brinda and Mr. Brighton, maybe within a week or so. So with that, or if there are any other questions, we can unmute you or you can type it up, or else you can please send your questions in an email to us and we will be able to respond to you or call us or text us. Thank you all very much, and I'm going to still wait for any other comments or questions.
Please send us your comments and your questions.
Yes. Thank you, Mr. Anthony. Thank you, Dr. Brinda. And we really appreciate you. And
Pleasure, sir. Pleasure.
We appreciate expanding our partnership.
So we are connected through.
So Dad, if I can ask, how much have we invested in USD with RadoLabs from our family?
How much is the first one is about
So
35 lakhs, and then another 27 plus 27.
7. And another 27 is on the way.
On the way,
The tricky cluster.
Right?
Yeah.
So 4 clusters alone is 1 crore plus 35, 1.4 crores. which is about somewhere around a little less than $200,000 so far. I think, if I'm correct.
So
but, we will be
1.4 crores.
for this 2 crores as well.
Mhm.
And we believe in this, and then let's move
So,
forward.
yeah, we're gonna be about 1.5 to 2 crores invested into RadoLabs from our
Yeah.
family, extended family. So that shows our personal commitment. And that's a commitment we make to all of our investors as well, right? When we offer an investment, we personally invest. But something that's been special about this is that we've invested a lot more than we have in other investments. This should inspire confidence with you guys because of how much we are, our belief is in this, not to mention both my father and myself are making frequent trips to, politely say, keeping our eye on our money, right? In fact, that doorbell is for one of our partners that's our operating partner for our lab that Dad has here. So it looks like we don't have any more questions. And so we are going to wrap up this wrap up this webinar. Thank you very much for your time. If you guys have any questions, you know how to get a hold of me. I look forward to speaking with you all personally.
So one more thing is basically, I think I mentioned it in the beginning. And say, for example, you're getting about 10%, right? Which is about $5,000 a year, which is 4 lakhs, right? 4 lakhs. And 4 lakhs of rupees, if you want to give on a monthly basis, divided into a monthly basis, then and then give it to one of your loved ones, brother, sister, or mother, father, parents, or whoever it is, and you should be able to use that as well. And then once you start enjoying that, and you will have opportunities to invest more, and that then you can fund your own trips over here and things like that. And also,
If I can say one more comment.
yeah,
After you invest here, your trips can be a business expense to India.
exactly.
So when you fly here, you can spend it out of your returns. One, your investment is now paying for your vacations, and it is a tax deductible business expense.
And you get to inspire your children to keep coming to India like Ramu is now doing, right? That you can put a value for that. So thank you all very much, and we'll be in touch, and really looking forward to your investment or your questions, and then investments. Thank you.
Perfect. Thank you very much. Mr. Dinesh, yes, all payments start on year 2. Year 1 is a holiday, no returns. All returns start on month 13. Thank you all
Dinesh,
for your time.
Yeah.
And
the 4 lakhs is going to be divided into 12 months, right? So that's how
12
you're
months.
going to get it. So the 13th month, you will get a monthly payment, which is equivalent to 10%. All right, thank you, Sundar. I really appreciate, and we are very passionate, and please reach out to us. Thanks, Dinesh, and we will be back.
thank you, Mr. Sundar.
And have a wonderful day. Thank you, Brighton. Thank you, Dr. Brinda, and we now officially closing this webinar.
Thank you.
Thank you, everyone.
Thank you so much for having us. Thank you,
Thank you.
everyone.
Thank you for the opportunity.
I look forward to work with you all.
Yeah, bye.